Okay, welcome along to another episode of Trading Force. And today we are joined by Benson, or as some of you may know him, Benny Talks Money. He's really quite big on Instagram, and he's been posting so much content over the last couple of years, which has really gained quite an audience, especially here in the UAE, which is where Benson was born and raised, and he's lived it ever since, apart from spending 3 years studying finance in India. He then returned to the UAE after being in India, where he's been working in wealth management ever since. And Benson specializes in tax planning for non-resident Indians and producing a US dollar income for people who eventually return back to India. So Benson, welcome along and thanks for joining us today.
Thanks a lot for having me, Kieran. Very excited.
So I'm really curious. You've lived in the UAE for a long time, right? How's the country changed since you were, a young boy?
Yeah, so I don't know if any of you guys would have ever seen that one picture, probably from 20 years ago, where it was just the trade center on Sheikh Zayed.
The Toyota building, right?
Correct. So I do remember just that side of it, and I remember growing up, most of Dubai was from Karama onwards, Karama, Deira, that's how it was. And over the last 20 years, like I started to see this beautiful country just build a lot of buildings, roads, and infrastructure. So it's just amazing to see what this country has done.
And what you can do in such a short space of time.
Amazing. It's just mind blowing, and you don't see it. Like I didn't see it growing up, but then look at all of these pictures and going back to some of my old memories. I just see like desert. I remember when my mum got here probably 30 years ago, and she said if she would have to go to Abu Dhabi, they would have to catch like a boat. That's how it was, and it's just amazing to see how fast they've grown.
So that was the only way of getting down to Abu Dhabi. There was no road at all, no train.
Yeah, there was, but it wasn't as good as the roads.
Sure, yeah, you needed like a desert vehicle.
Correct, so that was the easiest route that time. So yeah, from there to here, it's just amazing, and I think Dubai's done a really good job in attracting a lot of expats as well.
Yeah, a massive amount. I mean, 90% of the population of the city is expatriate. I'm just curious, tell me about your parents' journey when they came here to the UAE originally, because they must have been one of the first kind of people to arrive that were non-Emirati back in, what was this
This was
90s?
1991.
Okay.
1990s, yeah.
So that's quite a brave move at the time. There must have been such a little amount here.
It was actually. So my mum got here first, and she and I was just thinking, right? So she was born and raised in a village in India. We come from Kerala, south of India. So as you can see, there's like a lot of Keralites here in Dubai because we're very close by.
Yeah.
So. Born and raised in a village in India, she studied to be a nurse, and she got an opportunity in Bombay. And from Bombay, they said, "Hey, okay, there's another opportunity in Dubai. Would you like to go?" And my mom's like, "Yeah, okay, let's go.
Let's do it."
Yeah, and hats off to them, right? The courage for a 23, 24-year-old woman. I mean, from where they come from, it was very different.
Oh, it's unheard of, I would imagine, at that time to not only leave your village, to go to Bombay, which is a big move in of itself.
Absolutely.
To then take the massive leap over to the UAE. And it's so different back then because this is a time before social media, before the internet, where you couldn't just, flick online, see what it's like. And we forget as well, I mean, the UAE was not like this at all back then. It was, did she tell you any stories of what life was like when she got here in the 90s? She did.
Yeah. So in essence, how it was she would write a letter, right? She would, initially when she first got here, I think she came down to Fujairah or Ras Al Khaimah, I can't really remember. And it was just like a small building over there. And all the way to Matha. Do you know where Wafi is right now?
Yeah.
Okay, that's where. Actually, funny story. I was
near the frame.
Correct, right near the frame. So she actually showed me the building that she lived. It was like a housing for nurses. That building is still over there, and she Just the other day, actually, just 2 days ago, we were going past it, and then she was like, "Okay, this is the building where I lived for 10 years."
Wow.
You know, and it's just amazing. And she told me that all of that area around was just sand. When she first got there, there was just that building, and she worked in Al Wasl, so it was just that. And she did tell me it wasn't the safest place back then, but then
Really?
yeah, it wasn't because again,
I can't imagine that, because it's so safer, isn't it? Like you never feel in danger at any point in time.
absolutely, absolutely. She back in the days, say like 30 years ago, 25 years ago, things like that. She said, there wasn't a lot of street lights, and there wasn't a lot of street lights. So, and yeah, it wasn't common for people to be. I mean, there wasn't a lot of malls and stuff like that, so you wouldn't really expect to be out unless and until you're just shopping. So it was just, when I say shopping, I don't mean going to I don't think there were any malls back then.
It's like a grocery shop or whatever.
Yeah, just like a grocery shop.
Very basic.
Yeah, very basic stuff. And it was just work. I would just work home. She would do like 12-hour shifts, like probably 5-6 days a week. And yeah, I remember one particular story that she told me that, when you go back to India, so she sends a letter to her family back home saying that, okay, she's going to be at the airport at this particular time. And then we're about 5 or 6 hours away from the airport, right, where my mom used to live. And she sent the letter. And the thing is, in India as well, if you land at like 2 a.m., 3 a.m., it's not the safest place to be, right? And so she is completely dependent on someone being there to make
someone receiving the letter.
Correct.
And getting there at that time.
And this would happen so many times. She would send the letter and she would arrive. She would probably send the letter a month before, and she'd probably arrive after the letter,
after the letter got to the house?
Correct, yeah.
Oh, man.
So
because of the postal service.
and that's why I really think, massive, I think they took a bold move, it was...
Yeah, for sure. We really do take for granted how much things have changed.
Absolutely. Right now it would be okay if anyone's traveling because you've got instant access.
Yeah, for sure.
And
you're going to order an Uber. Or whatever you need to do. It's just kind of these little phones sort pretty much most problems out for us.
I remember my grandmother, my grandmother was like, "What is Dubai?" They've never heard of Dubai, UAE, nothing like that.
Well, because it wasn't a thing. I mean, obviously there was some settlers around the creek. There was some sort of Bedouin communities here and there.
Yeah, and funny enough, right? I think I was having a conversation with someone last week. His folks got here 1969, 1970s. So that time, the currency that they use here were the Indian rupees.
Really?
Yeah. And if you'd see, a lot of Emiratis, most Emiratis can speak very fluent Hindi.
Okay.
Right? And I think this is more so the older generation. Because I think 50, 60 years ago, the Indian rupees were here and we were trading partners.
Sure.
India and UAE. So he was telling me that his parents got here 60s, 70s, and that's how it was, and then it just slowly transitioned
to this metropolis.
Yeah, amazing,
incredible we've come to. Okay, let's move on then. So you have kind of grabbed the opportunity of working on social media within the wealth management industry. So the wealth management industry is obviously changing at quite a speed, the way at which people receive advice. We've gone from extremely traditional methods of client business development to now modern ones, which you're sort of grabbing by the horns and running with. Can you just talk us through what the response is like and what common questions you get from people on social media? So you're putting content out about, financial housekeeping, financial basics, investment strategies, things like that. What are the most common questions and responses that you get online from people?
So I think one of the most common questions is most people don't know where to start.
Sure.
Right? Most people don't know where to start, and because there's so much information online, they're just clouded by all of this information. They just don't know where to go, what to do, right? And the most important thing is nobody wants to lose any money, right? So the biggest help that they need from me is, hey, can you point me to the right direction, or can you help me with showing me the right path? Because everyone's afraid to lose money. And if you just Google, where do I invest? You've got 500 options showing up, and then your Google ads, Facebook ads, all of them pick it up, and then you see all you see is investment options.
Yeah, it can be very, very overwhelming. It's like, I think it's almost if, say you're going to a new city or you're going on holiday somewhere and you don't know anything about the city, and you go on booking.com and there's like 300 hotels and you don't know where the good neighborhoods are, you don't know where the attractions are, you just see different hotels, different prices, and you're like, where do I start? Yeah. And without guidance, without someone saying, oh, this is a really nice neighborhood or this is a great place to live, you're not going to know. And then it can be quite easy to make a mistake and you end up in the wrong place. I know someone who came to Dubai on holiday, and they stayed in Ras Al Khaimah because they were like, I'm going to the UAE, and they booked in RAK, and no problems with RAK, but they wanted to be in Dubai.
Right.
So it's so easy to make these mistakes without guidance, and I guess that's where you come in, right?
Yep, absolutely. You know, I'm the guy living in the city telling you where's your best areas to live in, where you shouldn't live in, what are the mistakes you should make, what are the mistakes you shouldn't make, and kind of just making sure you don't have a bad experience.
Mm-hmm. Right? So is that the biggest challenge people face, just getting started then?
I think one of the biggest challenges is getting started, right? And this is something that hurts people a lot, indecision.
Sure.
Right? Because if you're someone that just started working at say 25, right? You're not essentially too fussed about investing. But
especially here, because you're living life.
Yeah.
You're focusing on, most people anyway, you're focusing on other things.
Correct. And you get like 3-4 calls from banks trying to give you a credit card. So you've got unlimited debt that you could just...
That's something that people don't talk about enough here as well. The amount of credit you get given as soon as you open a bank account and you get a fairly okay salary. It's common that you'd get like a credit card that has 4 times your monthly salary.
And you could probably take 3-4.
You can get a few of them.
I've got a colleague that has 7 credit cards, but he uses it extremely smart, right? So he gets
like points and
points and stuff like that. So there are people that use the system for their benefit, but
the majority don't.
The
majority end up paying a lot of money paying off credit card. Yeah, because when you get so much credit, and this for a lot of people, this really is a city of temptation. There's so many things you can do. There's so many nice restaurants. There's so many great places to be, that if you've got that credit limit of 30, 40, 50,000 dirhams just sat there on a card, and someone says, oh, do you want to do something on the weekend? It's very difficult to say no. But I just want to go back to the point of getting started. And I think it's key to address the fact that if people are thinking about starting investing, they already have at least got the ball rolling. Just by thinking about it already, I mean, it means they're kind of, the wheels are in motion. But what is the easiest way to sort of dip your toe in the water and get things going? Or is it in fact that you need to come and make a sort of longer term plan? What's the initial strategy?
Right. Okay. So now I think this is super important, right? So I don't think if anyone is starting off, they should be even thinking of buying individual stocks. I've had conversations with so many people that have said, oh, my friend told me to buy this. Oh, I saw this on the news. Oh, I heard this new IPO, and they've just lost a lot of money.
Sure.
Right? And the problem that this brings is, if you burn your fingers investing, you're never going to invest. And then you end up spending 5-10 years of not investing because you've had a bad experience. So I think top priority for anyone starting off should be what can we do to ensure there is 0% chance of someone losing money.
0% chance.
Correct.
Okay. Talk me through that.
Amazing. Okay, so
because most people would be like, there's no such thing as a risk-free investment.
You're right. You're absolutely right. Right. So the stats are if you invest today, and if you were to reinvest, if you were to buy something today with the purpose of selling it within 1 month, there's a 62% chance of you making money.
Buying what? Sorry, just any.
Let's say an ETF. Let's say an S&P 500.
Okay. Fine. Okay. So for those who don't know, that's the largest 500 companies on the US stock market, and that's a exchange traded fund that tracks it. So it gives people exposure to a lot of different sectors and a lot of different things. Yep. So start off with that S&P 500.
Correct. Yeah. So you buy the S&P 500. You think of selling it 1 month from now. Your chances of making money is 62%.
Okay.
Chances of losing money, 38%. Hold that on for 5 years. I think the chances of making money go up to 92%.
Okay.
And the chance of losing money is...
And this is based on historical data, of course, right?
That's correct, yes. If you hold it for 15 years, the chances of making money is 99.8%. The chances of losing money is 0.2%, right? So the easiest thing someone can do when they're investing is to invest and completely forget about it.
Sure.
Right? So it's important that when someone invests, they're not investing money that they need.
Yeah.
Within 2 years or 5 years, right? So that's super important as well.
Because then you'd have the temptation, well, not the temptation, perhaps the necessity to go into your investment portfolio, take the money out and use it if you needed it, right? So you're saying it's key to only put money in your investment account that you can absolutely not need, or in best case scenario.
Correct, yeah. I mean, there's a lot of worst case scenarios that can happen, but your intention when you're going into an investment is, I'm going to invest this money right now and I don't want to touch it, right? Because the longer money sits, the longer money works, the bigger it grows.
So time in the market.
That's it.
That's the key. So it's not risk-free per se, but it is saying that the longer you invest, the more patient you are, the more you leave it alone.
Correct.
The greater your chances of success.
Absolutely right. The longer you intend to invest, the less riskier your investment becomes.
Okay. Well, that's good. And thinking about, so these are the factors that can work in your favor for young or new investors. There's a lot of things that work against people at the moment. So obviously inflation's a really hot topic this year. We've seen numbers that we haven't seen for a couple of decades in developed economies. So by not taking action, by sort of burying your head in the sand and looking at all the options and getting overwhelmed, as we spoke about before, what's the impact that inflation has on savers? Say they're being really good, they're putting X amount into their bank every month and they think they're doing a good job. And they are, because it's anyone who puts money away every month and demonstrates that discipline is putting themselves in a great position. However, what's the issue and why is inflation so important?
Right. Okay. So a couple of things, right? I think the most important, we all know about this, but I think it's important that this is being constantly reminded, right? So you have money in the bank, nothing's working for you. It's guaranteed to go to zero, right? Any money in the bank is guaranteed to go to zero. Banks don't even put their money in the bank. If you've put $100 in the bank, there's a system called reserve. I can't really remember, but in essence, the bank can loan 10 times that amount of money, right? So you put $100, the bank can loan $1,000 worth of money, right? So they loan it and they're making a lot of money out of this, right? So the investors with savings account that are getting 3-4%, losing.
If they're lucky.
If they're lucky, absolutely. Getting 3-4%, still losing out of inflation.
Normally you're looking at, it depends what country you're in, of course, but in like developed economies, you'd be very lucky to get 1.52%. And this year, obviously, inflation's sitting at between sort of 5 and 8%, depending on the individual economy. As you move into less developed economies, obviously you're getting higher rates of interest, right. But inflation then, of course, is much higher again.
You could go to Zimbabwe and get 80% on your money if you put money in a bank account.
Yeah.
Right. But the currency is falling down. Inflation is really high, right? So So that's super important. I have a lot of conversation with NRIs here in UAE or GCC more so, saying I get 8%, 7% in a bank in India. Why do I need this investment that gives me 8%? But the currency is drawing down. Now, that's not really bad. Okay. Let's say if someone wants to live in UAE or GCC for 10, 15 years, go back to India, that's absolutely fine. I would still advocate you have to diversify your currency as well, because of how volatile certain currencies are. Right? You've seen what happened to Sri Lanka, you've seen what happened to Lebanon, you've seen what happened to Egypt. So there are a lot of risks that are there with currency fluctuation as well. So if you're spending time out of the country thinking that you will eventually go back to the country, that's okay. You could still, to a certain limit, to a certain degree, you can accept that currency devaluation, because you're never bringing rupees outside of India, because that's when you'll be hit really bad.
Sure.
Right?
Yeah, so if you saved in rupee and then you moved to Greece for your retirement, for example, and then you're trying to spend your rupees in euros,
correct,
you're going to get annihilated.
Yeah, absolutely.
Yeah. Okay.
So and this is what happens most of the time, right? So with most of the clients that I work with, 40-year-old, 45-year-old, got 2 kids, living here in the Middle East, getting dirhams, which is in essence dollars, because it's pegged, and they take all of the money from here and they put it back in India, right? Now that's not bad at all. It's really good that they're doing that. Money's invested, money's growing and working for them. The problem is, because their kids have been born and raised here in the Middle East, they're very likely to be expats as well.
Sure.
Right? And most of them would study either here or go to any Western country. And some of them go back to India as well. But the problem is, if someone plans to go back to any Western country, then you would have to take the Indian rupee, convert it back to dollars, suffer the currency devaluation, and just give it that, which doesn't make it efficient at all.
So what you're saying basically is, if you're living here, then it's beneficial to save in kind of the stronger global currencies. Is that right?
Absolutely. So a perfect investment, I mean, there's nothing like a perfect investment, but something as close to a perfect investment is to remove as much risk as possible. So one risk is, how can we make sure that you don't lose any money? Invest for the long term.
Okay.
The second risk is currency fluctuation, right? I'll give you an example. My dad took a life insurance 10 years ago, 12 years ago from India, for 1 crore. For the guys that don't understand how the Indian decimal places work, that's 10 million Indian rupees.
Okay.
So 10 million Indian rupees was about $235,000 or $240,000 12 years ago.
Okay.
The same 10 million rupees right now is $135,000.
Okay.
Right? Now, that's not really a big problem if
you're in India.
If you're in India, that's okay. Right? Yes, you've lost value of your money because inflation is a lot higher. But because he's now decided that he's going to work here, probably retire in UAE itself, it's very likely that he would need most of his money in dollars.
So he slashed his insurance coverage by half, essentially, by investing in the wrong currency.
Correct. And that's what a lot of nationalities here in the Middle East are doing, right? It's okay to have part of your investments back home in a different currency, but even if there is a 5 to 10% possibility that you would not go back home, or you would retire to any other country and you would need another currency, it's super important that you have diversified your portfolio from a currency standpoint as well.
Okay, that makes complete sense.
Right. And it's there all around the world, right? the Pakistani rupees has lost quite a lot of their value. Indian rupees has lost quite a lot of their value. Nigerian naira has lost quite a lot of value. The Egyptian pound has lost a lot of their value. And the only value that we have here in the UAE is the dollar's pegged.
Yeah.
Right?
Otherwise,
which is a beautiful opportunity, right? So straight away, I mean, think about sterling, right? Probably like 5-6 years ago, so £1 would be like 6-7 dirhams, all the way to 4.2 dirhams last year.
Yeah.
Right. So
it got very scary very quick for a lot of Brits.
Right. It did. Right. And now all of a sudden, you were paying a set amount of money on your monthly investments, and that's completely changed. So you're just thinking, okay, what's going to happen to the pound? What is all of my wealth? You know, if something happens to the sterling, I don't think it will, but you never know, right? But if something happens to that, you're just sitting in a position where you're thinking, okay, what's going to happen to all of my wealth? So I think even if there's a slight possibility that you would live in any other country, you have to diversify your currency as well.
Okay, fantastic. Right, let's move on now to, we've covered kind of how to get started, but I just want to say, or like cover through the topic of, if you've got someone who is in the sort of early parts of their career, and as you said before, they're a bit overwhelmed by the amount of options, what would they gain from coming in and having a chat with someone like yourself?
Right. So I think the most important thing is clarity and structure, right? So because we do this day in and day out, as opposed to them sitting at home,
trying to work it all out,
reading 5 books, making mistakes and losing money. This is the most important thing, right? I've got so many clients. Actually, some of my biggest clients are clients that have interactive brokers that thought of doing DIY investing, right? But when the markets went down last year, they panicked and they sold.
Yeah.
Right? When 2020 happened, they didn't know what was going to happen. And you're panicking, right? Because you're not an expert in the field. I mean, this is what we do day in and day out, 6 days a week, 5 days a week, right? So we've got a higher chances of making sure you don't lose your money. And that's top priority, right? So if someone were to come to us, the lens I look through before recommending any investment is, what is the possibility of this investment going to zero? And if that chance is really high, I would not recommend it to a client.
You know, I think what's really interesting, you talk about how people would buy a load of books, open an interactive broker's account, and there's nothing wrong with an interactive broker's account, it's a good platform, but you buy a load of books and you go through this process of starting out your investment journey. And there was a person, well, not a person, but it was an account on Instagram called The Expat Investor. I don't know if you came across it. And in COVID, they were super popular. And for those who track the markets during COVID, we saw this mass period of expansion where equity prices flew. And a lot of that came as a result of like cheap money entering the market. And this account, and it was someone who works in the UAE. So I was following out for it. It was really interesting just to see their journey and what they bought and how they got on. And they, like most people from sort of May 2020 onwards, for about 12 to 18 months, did super well, and everything they bought seemed to go up in value. And I think what they probably suffered with, and it's quite common for a lot of DIY investors, is a case of overconfidence when they first start out and they start buying things and they think their abilities are better than they are, when in actual fact it's the wider market going up. And then as the markets crashed in sort of late part of 2021 into 2022, the expat investor then kind of shifted and said, and admitted, I became overconfident. I thought my abilities were greater than they were, and then shifted to a pathway of investing in the MSCI Global Index. And the MSCI Global Index is it's an ETF that tracks equities from across the world. So it gives you a super amount of diversification. And what that story told me was that this person had obviously had a lot of interest in investing, started really well, but ended up after 18 to maybe more like 24 months, getting to the point at which they probably would have been if they had a chat with us in the first place. And it would have caused a lot less damage because that person was going into individual equities, like I think Beyond Meat was in there and Plug Power. A lot of these NASDAQ-based tech companies that did super well in the pandemic. only to find out that they were completely overexposed to tech. The price earnings of all these stocks were crazy, but people didn't realize it because they thought, oh, the market's doing great. And when markets are doing great, people are like, okay, it's fine. We'll just stick with it. Things will go up forever. But a financial advisor will tell you they won't. And you've got to take the emotion out. You've got to take the excitement out of, oh, we're doing so well here. Let's keep plowing money into these high risk equities. If that person had initially gone into the MSCI Global Index or an ETF, S&P 500, they would be in a far better position. So I think what underscores the point that you made before about come and have a chat with us, don't go into stocks, don't go into too much risk, and diversify yourself, was really demonstrated by that story.
Yep, absolutely. I 100% agree. But there's also one more thing that I'd like to just highlight, the fact that you mentioned about emotion, right? If I would be investing my money, there would be a certain degree of emotion linked to that decision.
Yep.
Right? And we're all emotional beings. And it's very difficult to control fear and greed.
For sure.
Right? And I think that's the biggest value that we provide.
You take that emotion out.
If someone's investing $1 million with me, if someone's investing $500,000 with me, there's no emotion, right? I mean, I don't have that emotion. My top priority is how can I make sure I have a long-lasting relationship with this client? How can I make sure that his investments keep growing so he invests a lot more money and he gives me referrals and recommendations, right? This is my top priority. And also, and more importantly, what can I do to make sure that there's a very small chance of him losing any money, right? So there's no emotions. There's just facts, and these are some of the options that we could do. And that's, in my opinion, I think that is the right way to go ahead about it.
No, I completely agree. I mean, just as another example that sprouted from the COVID times, like my parents had never really invested in markets before. And when we were mid-COVID and the markets had collapsed, I said, okay, this is a really good time to get any liquidity that you've got working for you. So they opened an account in the UK where they live, and they did really well. And then when 2021 came, they were checking their account every day, and they were really happy. In 2020, things were going up, and they got really giddy, and it was really cute. And then 2021 came, and then 2022, more importantly, when there was the invasion. And it was such a classic case of emotion where all the news headlines were coming out about it being Armageddon, about potential for a nuclear war, about the global economy falling apart. And emotion set in. And my mum, when the markets dropped, just wanted to sell. She really wanted to sell. She was like, oh, it could get a lot worse. And my message at that point was, the damage at this point is done. The invasion's happened. The problems are priced in to the market mainly. If we sell now, we've just wiped out all the progress we made over the last sort of 2 years. Just relax. And now things have started to get better. We're about a year on since the invasion of Ukraine. Things are picking up, and they're relaxing again. Yep. And they'd probably be in their mindset, oh, the markets have got better. Let's put more money in now. When in actual fact, the time to do that was last year. But that's where the financial advisor comes in, right? To take the emotion out. It's Warren Buffett who said, when there's blood on the streets, that's the time to be greedy. And when everyone's been greedy, it's the time to be fearful. And that's so important. But people just you don't feel that when it's your own money. So if you can give that responsibility to a financial advisor who has no emotion over it, you're going to probably do better, right?
Absolutely. And I think sometimes it's as easy as just having a conversation, because bear in mind, I have a lot of, there's been a lot of my clients that went through the same journey last year, but none of them have lost any money. It's because, and I would say that a couple of reasons for that is we have a huge team of people that update us with what's going on in the market, that update us with what needs to be done now, what is a good investment right now, what you need to do with these portfolios, what you need to be doing with those portfolios, right? So an individual investor, right, that doesn't have access to any of this information, that doesn't have access to the top teams, the top economists around the world, would have no idea, right? And I don't expect anyone to do a lot of research and kind of, get any of this information out. So sometimes it's as as easy as just having a conversation with someone and just saying that, okay, what are the stats? The stats are the average time span of a recession is 18 to 24 months.
Mm-hmm.
Yes, if you're extremely unlucky, this can probably go to 3 years, this can go to 4 years, right? For those people who don't need that money within that amount of time, this is just a buying opportunity.
Yeah.
Right? And sometimes it's as easy as just having someone to talk to and going back to what were priorities. Was our priority to make 20-30% return per year and pull out the money within 2 years? No. Our priority is to ensure that by the time you're 40, by the time you're 50, by the time you're 60, whatever it is, you have enough passive income coming to you so you don't need to work, right? And we're just taking advantage of the ebbs and flows in the market to make sure we reach that goal.
Yeah.
Right? So I think that's another area where we provide a lot of value.
No, I completely agree. I think it's been a really interesting conversation, just underscoring, I think a lot of these are investment basics, but when you work in the industry, you forget that message isn't often shared with people. When we talk about emotion, when we talk about the importance of diversifying, when we talk about currency, these are crucial bits of financial housekeeping that everyone really should be doing. And that's what we're here for as a company, to make sure that people are doing those things, because it's like going to the gym. You can be a little bit lazy, and if your PT is not there, you just skip a few classes, and problems arise. If you've got someone there just to keep on at you, okay, we're doing this, we're making sure this is in shape. Keep checking back with the client to say, okay, have things changed? Are you going to be going anywhere different in retirement? What's happening in your life? Great. You've told me you're going here. There's an opportunity with that. There's a tax planning opportunity. These are the things that people just don't know about, right?
Absolutely.
And that's why we're here. So, Benson, thanks so much for joining us today. It's been a really insightful chat, and I'm sure we'll have you on in the not too distant future again to have another chat. And I think in a few weeks' time, we're going to be having a conversation about non-resident Indians, right, and how they can do some tax planning for people who are, especially here in the UAE. So do keep an eye out for that episode when it's ready. But Benson, thanks so much for your time, and we'll speak to you soon.
Perfect. Thanks a lot for having me, Kieran.
Most welcome. Bye-bye.